It's Larry Gonzalez with your housing market update for the 19th of December, the week before Christmas. Man, we're almost there. We're almost to the end of the year, and a lot of news to go over this week. So let's get right into it. We'll start off with the big three: prices, inventory, and rates. Well, prices and inventory keep going up. Show you a little bit of that. And rates went up too. All right, and why did that happen? Well, let's get into that. Headline news for the week: home builder confidence is still negative, which sounds bad. It's about where it was the previous month, so it had some improvements. The Fed is saying bah humbug in 2025. That's right, that was the big news, the big earth-shattering news for the economy and for mortgage rates this week. But we'll get into that. Existing home sales pick up again, second month in a row, and jobless claims. Man, you talk about a seesaw. They were up last week. They're down this week. So first, let's get into the home builder sentiment, the National Association of Home Builders sentiment, and it stayed the same in December as it did in November at 46. Still feeling negative. All right, anything above 50 is positive. We're still at 46. It was kind of interesting. Current sales expectations stayed the same. Future expectations they're positive. The builders are feeling positive about the future. Current traffic though, current buyer traffic though, actually went down a little bit. And I tell you what, guys, we had about 5 months in a row where home builder sentiment was going up. You had rates going down in September, August and September. A lot of positive momentum going into the end of the year. That may change next month. When we get the January report, we might see those numbers go down. And that's because interest rates have shot up. They shot up October, November, and now in December. All right, and why is builder sentiment going down? One, and they need inflation to come down. All right, inflation is not going down anymore. It's actually steady, even going up. Builders need inflation lower because they need to buy goods. The cost of goods is going up. They also need interest rates to go down because they need buyers to flood the market to buy the homes that they're building. And they're not building enough to meet the demand. We need about 2 million homes a year, and we're way short of that this year. And there's really no expectation that the delta between what we need in new homes is going to be met by what they're building, especially in 2025, if interest rates continue to stay high and inflation stays high. So expect this to change next month. Speaking of the Fed, the Fed is playing the Grinch this month. Now, they did lower the Fed funds rate by 25 basis points. That's a whole 1% that they dropped, or 100 basis points that they have dropped the Fed funds rate this year. The expectation after last month's rate drop was that they would have 4 rate drops in 2025, about 100 basis points again, or 1%. Drop in the Fed funds rate. Well, today, or yesterday, I should say, the Fed said, you know what? We expect to only have 2 Fed rate cuts in 2025, about 50 basis point drop. So what does that mean? Why is that? Well, the economy is strong. Fed Chair Powell basically said, hey, employment is strong, the economy is strong, and inflation, it's stuck and even going up. And they actually expect inflation to go up a little bit in 2025. So they need to keep this restrictive rate environment to basically keep spending from really going out of control. We saw that earlier this week. We saw a retail sales report that was much stronger. And then also on the heels of the Fed lowering the Fed funds rate, we got that GDP, the third and final look at third quarter GDP, gross domestic product, and it came in at 3.1%, which was higher than the 2.8% that was predicted. So again, stronger economy than expected, higher inflation than expected. Basically, inflation's hit the floor and it's starting to go back up again. We're not going to get to that 2% that the Fed wants. Now, here's one thing that will change this whole look. And the Fed was dovish. If you look at my report from last week or last month, the Fed was dovish when they made their Fed rate cut. And this week or this month, they are hawkish and saying we're not going to lower the Fed funds rate 100 basis points. If we get a jobs report in January that shows unemployment going up, guess what? We may see them go back to 100 basis points. So Really, so much is riding on unemployment. Unemployment has stayed between 4.1 and 4.2% much of the last 6 months. If we get to 4.3%, you know what? They may bring those other rate cuts back on the table. If we get to 4.5%, guarantee you they're going to bring those rate cuts back on the table. So really, a lot depends on where the unemployment and the unemployment report, unemployment percentage comes in this next month in January. And we're going to see that in 2 weeks, people. You know what? Shifting like the winds. That's what the Fed does. They're basically going off of economic data. And that's what we're seeing right now. So let's go to existing home sales, and this is for the month of November. We had a strong rise in November. This is up 4.8% from October. That is pretty big. But let's look at the people who closed in November. They locked in September and October when rates were lower. All right, so those buyers, they were taking advantage of lower rates. We will probably not see this same rise in existing home sales in December when we get that report in January, because interest rates have shot up. Now, here's a couple other things. The median home price dropped about $1,000 from $407,000 to $406,000. So not much of a drop, and really up 4.7% year over year. 32 days on market. That's the average on market, up from 28. Now, what does that mean? All right, homes are staying on the market a little longer, but there's more inventory. We're still seeing more homes sold because of those lower rates, but homes are typically staying on the market a little longer. Inventory overall, because of the low rates that we had in September and October, inventory overall dropped. It was down 2.9% month over month, down to 1.33 million. That's the inventory of existing homes. And here's another thing. You see a lot of news in the media, or a lot of media news talking about first-time home buyers are only representing 27% of all home purchases, existing home sales. Well, that's pretty normal. It's been like that forever. Well, guess what? This last month, first-time home buyers were 30%, all right, up from 27%. Cash buyers actually was down from 27 to 25%. And investors were down from 17% down to 13%. Hey, those first-time home buyers, they want to buy. People want to buy. They just need affordability. All right, and it just shows when rates are down, guess who came in droves? That's right, or droves. They came in droves, first-time home buyers. Not going to spend a lot of time on this, but initial jobless claims up 15,000 last week, down 20,000 this week. All right, down to 220,000. Continuing claims, they were up like 155,000 last week. They're down 5,000 this week, down at 1.874. Still pretty high, and the highest really we've had in about 3 years. But again, and what I said last week was 1 week doth not make a trend. Hey, that proved correct this week. Not a lot of people filing initial claims, or not an increase, but a decrease. Let's look at VA rates. Mortgage rates popped above 6.5%. Since the September low, interest rates are up nearly 1 percentage point. All right, we are squarely in between 6 and 7%. We're above 6.5% for VA rates. And again, these are not my rates. These are average across the country, but interest rates are higher. What we need to get interest rates lower, it's going to be the jobs report in 2 weeks. We need a jobs report that is not conducive to the Fed raising the Fed funds rate, or inflation going up and unemployment going down. We need unemployment numbers to go up. We'll see that here in a couple of weeks. But if you look at that, again, what I've said before, we have squarely been in a channel between 6 and 7% since September of 22, when interest rates initially shot up. We're still there. What does that mean? Well, mortgage apps, believe it or not, mortgage apps were up last week. Again, just showing that people still want to buy homes. Refinances were down last week, and that's to be expected. And I tell you, I say this a lot. Now is the best time to buy. Trust me, when rates go down, and I don't know when they're going to go down, but I do believe they will. When rates go down, there's so much pent-up demand. You're going to see people popping back in the market. Will home prices go up a lot? No, I don't think they will. But those credits that sellers are given, $10,000, $20,000, $30,000, even $40,000 in seller credits, they're not going to have to give those anymore. And what does that mean for you as a buyer? You're going to have to pay your closing costs out of pocket, possibly pay your buyer's agent if the sellers decide, you know what, this offer over here tells me I don't have to pay the seller or the buyer's agent. That puts the buyer agent payment squarely on the buyer. And for VA buyers in particular, and first-time home buyers, and that's a pretty tough nut to swallow, because most VA buyers really don't have the money to pay their closing costs and to pay their realtor. So get in now while the sellers are still paying buyer's agents and they're still giving you seller credits to at least get your rate down temporarily make that home payment affordable out the gate. And now is a very good time to buy. I know I'm on my soapbox, but that's where we're at. Okay, even the dogs agree. Now is the time to buy. So really, that's all I have for you before we head off to Christmas. I hope everybody has a very Merry Christmas. And if you know anybody who's looking to buy in 2025 and they want to know about the market, they want to know their buying power, just send them this, pass them my information, like, comment, subscribe, and share. I'd love to hear you get your feedback too. All right, have a great Christmas. We'll talk to you later. Aloha.